How does the big beautiful bill benefit tenants, homeowners, and/or real estate investors? I introduced this question in a video early in the series, and I got a lot of "you talking in circles, you not saying nothing, this is clickbait, why you wasting my time, yada yada." And so let me be very clear moving forward about how this series is going to work. I'm only going to talk about one of the changes to the big beautiful bill in every video. I'm going to explain what the topic is about, what has changed, and who it benefited. So today we're talking about the SALT deduction. SALT stands for state and local tax. So for those of you that know, you can deduct the tax on almost anything you pay. Grocery stores, shopping, cars, all of that. But the thing is, you have to itemize your deductions. And this might be better explained using like real numbers. So let me give you real people. Say you have a tenant, a homeowner, and a real estate investor who all make $75,000 per year. Each person can technically write off all of the taxes they pay. The standard deduction for individuals is $15,700. So unless you're deducting more than that, odds are you're going to take the standard and this will be your adjusted gross income. But most people are not paying more than $15,000 in taxes, right? At least most tenants aren't. If you own property, there's a big chance you are paying more than $15,000 in taxes. Before the big beautiful bill, the SALT tax cap was $10,000. But now the SALT cap has increased to $40,000, at least until 2030, meaning homeowners and real estate investors can write off a lot more of their homes and investments than they could prior to this bill, lowering their overall income and their tax burden. Now, I do want to clarify something. For most investors, they were already able to write off all of their property taxes if their property was held in the right sort of entity. I have a property that I pay anywhere between like $90,000 and $100,000 in taxes every year. I was already able to write all of that off. But as a homeowner or an investor with properties in like pass-through entities, I got a little murky sometimes. But now that has been increased, at least until 2030. Want to make sure I got that right. And we're in section 70120 of the BBB. So which of our $75,000 earners does this particular change benefit? For most renters, probably not at all, unless they were already high spenders and itemizing their deductions. For homeowners, it benefits a very specific group of people who have higher incomes and likely itemize their deductions, and people who have higher property taxes and now might consider itemizing their deductions because the SALT cap has been increased. And for real estate investors, most of who were already itemizing their deductions, now there's higher limits, I guess, for your personal property or anything in pass-through entities. Hope that helped, and tomorrow we'll talk about bonus depreciation.